We are currently tracking a rare market setup, a 135% volume surge that aligns perfectly with a fresh technical breakout. To evaluate this, we use the Techno-Funda blueprint. Fundamental analysis gives us the intrinsic why a company is worth investing in, while technical analysis provides the algorithmic when to enter the trade. The subject of today's blueprint is Tilaknagar Industries, following their Q4 FY26 earnings report. This analysis focuses on the objective way raw market momentum validates the company's recent corporate restructuring. To understand why the chart is flashing a buy signal right now, we have to reverse engineer the transformation happening on TI's balance sheet. Tilaknagar Industries already holds the dominant position in premium and above Indian-made foreign liquor, or IMFL, in southern India. They command nearly a 40% market share across their target regions. Their legacy flagship brand, Mansion House Brandy, recently crossed the 10 million case volume benchmark. The structural catalyst driving the current setup is their recent acquisition of the Imperial Blue whiskey business. Integrating Imperial Blue immediately shifts the company's operational reach into a higher volume tier. In just 4 months of owning the brand, TI achieved a total volume of nearly 20 million cases. Tilaknagar Industries operates as a vastly larger entity today than it did 12 months ago. That is the baseline for our analysis. Looking at this Q4 FY26 ledger infographic, we can see the immediate impact of that scale. Let's start with the positives column, which highlights a massive net revenue growth of 148%. In absolute terms, that translates to 949 crore rupees generated in a single quarter. That revenue is driven by a 135% volume increase, pushing total sales past 8 million cases. Out of those 8 million cases, Imperial Blue alone accounted for 4.6 million. Beyond the acquisition, external macro factors are accelerating organic demand. We are seeing highly progressive excise policy changes taking effect, specifically in Andhra Pradesh, which is one of TI's largest and most crucial markets. The local government recently reduced consumer prices on flagship brands like Mansion House by 20 rupees per nip. Because the IMFL sector is highly price elastic, this price drop at the retail counter directly accelerates sales volume. Management is already forecasting further growth in the state, based on historical data from similar price reductions. The top-line surge in Q4 rests on a foundation built from both the inorganic scale of the Imperial Blue acquisition and organic policy tailwinds. Moving to the negatives column on our ledger, we have to look at the immediate drag on profitability, an exceptional expense of 63 crore rupees. The primary source of this cost is Transition Services Margin Agreement, or TSMA, fees paid to Pernod Ricard to support the Imperial Blue integration while labels are registered. A secondary risk factor is raw material cost inflation, driven by ongoing geopolitical tensions affecting input prices. To counter this, TI is upgrading its physical infrastructure, specifically by bringing their expanded Prag distillery in Andhra Pradesh online. Scaling this facility up to a capacity of 36 lakh cases per annum will yield 10 crore rupees in yearly bottling cost savings. Alongside physical efficiency, they've executed an accounting shift. Selling expenses, like distributor schemes, are now deducted directly from gross revenue rather than listed as other expenses. While this optically lowers reported revenue and gross margins, it clarifies visibility into their true profitability, paving the way for management's aggressive target to reach 16 to 18% EBITDA margins within the next 36 months. The short-term transition fees and accounting changes are currently obscuring the aggressive scaling and the resulting cost efficiencies. Fundamental theories mean nothing until the broader market actually begins pricing them in. This stark mode technical chart shows TI's macro trend over the last several quarters, establishing a clear structural sequence of higher highs and higher lows. We can identify distinct support and resistance zones that have formed specifically in the post-earnings environment. Notice the low trading volume during the initial consolidation phase, which sharply contrasts with the high volume pushing the current breakout attempt. Zooming in, we look for a specific algorithmic trigger, the volatility stop, or VStop indicator. Here, the line flips from red to green. A green VStop confirms mathematically that bullish momentum has overpowered the stock's average true range volatility. It is dangerous to try and anticipate a bottom or catch a falling knife based strictly on an earnings report. You wait for the trend to confirm the data. The green VStop serves as objective proof that institutional flow is stepping in to support the fundamental inflection we just analyzed. Every technical setup requires strict invalidation criteria. We have to closely look at the potential failure points. First is execution risk. Currently, 25% of the Imperial Blue business is still relying on Pernod Ricard's TSMA support. Management has to successfully transition this final quarter fully in-house by their stated hard deadline of March 2027. Next is financial risk, specifically the looming deferred consideration payment tied to the acquisition. TI is obligated to pay €28 million to Pernod Ricard in exactly 4 years. Finally, there is macro risk. If their supply chain optimizations fail, unchecked raw material inflation could compress that projected 16 to 18% EBITDA margin. These 3 risks represent the exact metrics you must monitor to know if the fundamental engine is stalling out. This radar chart visualizes the precise equilibrium we are looking for. Fundamentally, we have the Imperial Blue integration, Prague expansion savings, and a commitment to drive net debt to EBITDA below 1.0x by FY29. Technically, the green VStop provides algorithmic confirmation to enter the position. The ultimate rule of the Techno-Funda framework is this: technicals complement fundamental reality, they do not replace it. Based on this confluence of data, Tilaknagar Industries demands immediate placement on your active swing trading watch lists. Subscribe to Smart Capital